G'day guys, welcome back to the Devon Too Good investing channel. In this video today, I'm going to be giving you guys a updated valuation of Tencent and Prosus stock. So let's waste no time and get into it. So for this valuation, there will be a bear case, there will be a base case, and there will be a bull case. And in each of those valuations, obviously, I'll get more aggressive with my assumptions as I approach the bull case. But first, let's start with the bear case. So essentially what I've done is I've grown the revenue out from the last 12 months. And for the bear case, I've used a growth rate of 12.5%. And I've grown that out over the next 5 years, which will get us to the end of 2026. And assuming a growth rate of 12.5%, which is fairly conservative, Tencent's grown much faster than this in the past. In fact, it's grown its revenues at rates above 30% per year. However, there has been a recent slowdown, so we're going to be conservative with our growth moving forward. Jump down to the next line. I'm assuming a free cash flow margin of 22.5%. This is around in line of what analysts expect. The general consensus is sort of around 22.5% up to 25% for margins going out to 2026. This is, it's fairly hard to predict. We don't know what's going to happen in between now and then. So I'm going to be, on the conservative side and keep it at 22.5%, which then in turn gives us a free cash flow of 35.03 billion in 2026, which will grow from 22.2 billion at the end of last year. I'm also going to assume a free cash flow multiple of 16, which honestly is way too low for a business of this quality. It hasn't traded this low pretty much ever, but for this valuation, because we're predicting 5 years out into the future, 16 will be fine for the bear case. This gives us an operating business value. So this is there's two parts of Tencent's businesses. There's the operating business value, and there's the their investment portfolio value. And for their operating business value, we get 560.5 billion. And then for the investment portfolio, the management came out in the last quarter, so not for their full year results, but for their Q1 results, and they came out and they said their investment portfolio at the moment is worth 95 billion, and I've grown that out 15% per year. Historically, Tencent with their investment portfolios averaged well above 20% returns per year, so I am being more on the conservative side here, but it is what it is. And then we get an enterprise value. So what I did was I added up these two values together, and that gets us $751.58 billion. I've assumed they're going to grow their debt by a little bit. This is fairly insignificant in the scheme of things. They're going to have net debt of $11.2 billion, which gives us a 2026 market cap of $740 billion. And if we account for a little bit of share dilution, I've assumed 1% dilution per year over the next 5 years. That gets us our shares outstanding and a future share price of $72. And that would be a CAGR of 11% per year. Now, we're going to add in our Prosus discount because I'm sure some of you are wondering, hey, I can buy Prosus instead at a discount. What kind of return could I expect? Well, in this bear case, at the moment, the Tencent position within Prosus is trading at a 45% discount. And if we assume that 60% of the discount closes in between now and 2026, well, that gives us an effective discount of 27%, which effectively we would be buying Tencent shares at $33.62, and that implies a 17% CAGR. Now, for the base case, this is probably the most realistic case. So I've assumed 15% revenue growth per year going out to 2026. I have pulled it back a little bit since my last valuation. I think it is right to pull it back considering what's happened in the world and where we're at the moment. High inflation, sort of, macro challenges. So I'm being conservative here. There's nothing wrong with being conservative. I've kept the free cash flow margin at 22.5%. That gives us a free cash flow of 39 billion. I've kept the free cash flow multiple the same as what it was trading at the end of 2021. I feel like this is still fairly conservative, but it also could be, in line. Honestly, it's just a bit of a guess here, but it's conservative nonetheless. So if we get that means we get a operating business value of 762 billion and a investment portfolio value of 191, and that gets us a market capitalization, if we take into account the debt, 942 billion, and a future share price of $92.54, implying a 17% per year return. And if we add in the Prosus discount, in the bull case, I assume that instead of 60% of the gap closing, I'm assuming 75% of the gap closing, which effectively gets us Tencent shares at $30.51 per share, and that represents a 25% per year CAGR. Now, if we go to the final case, which is the bull case, I've assumed 17.5% revenue growth per year going out to the next 5 years. And I've kept free cash flow margins consistent throughout my valuations here. And this lands us at a free cash flow of $43.45 billion. I've assumed a little bit of margin expansion to 22. So it's nothing crazy, honestly. It could easily go higher. Tencent's historically traded above 30 with a free cash flow multiple. However, conservatism is the best way to go in these sorts of scenarios, because you want to factor in your downside, and then if the upside comes, then, well, you make a better than expected return. All these factors give us a future market cap of $1.13 billion and a future share price of $111.73, indicating a 22% per year CAGR. Then for the bull case, I've assumed 80% of the discount with Prosus closes. So effectively today you can buy Tencent shares through Prosus at $29.47, giving us a CAGR of 31%, which is an incredible return. Although keep in mind, this is the bull case, so this is getting close to best case scenario if everything goes perfect. In reality, nothing ever goes perfect, especially when it comes to investing. But guys, that is my valuation here. I'll lean towards more of the bear case or the base case in terms of expectations. And if the bull case happens, well, that's great, because you're going to make a lot of money. But guys, I hope you enjoyed this update. Leave some comments if you have any questions about it, or have any sort of challenges, or if you just want to discuss Tencent stock. And like this video, subscribe to my channel, and see you in the next one.